There is little doubt that a multitude of reasons has contributed to the recent drop in the market, including the highest inflation in 40 years, rising interest rates, unrest in Europe, a pandemic that is still going strong, and now concerns about a possible recession. That sound like a recipe for disaster, and for sure we're all on edge as a result of the recent spike in market volatility, and both novice and experienced investors are left wondering what to do with their money when all they have ever been told to invest in is colored in red. But we all know of one market that always bounces back higher than it fell: crypto. So, are you buying more crypto? And what are you buying? Altcoins or Bitcoins? Hello and welcome back to Crypto Cash Channel. What's your take on buying Bitcoin? Is it not worth the risk? In today's video, we look at why you should buy Bitcoin and the fact that it is at a discount. But, first, before we go on, a sub to the channel would be very appreciated. Comment, share the video, and don't forget to leave a thumbs up for the video. So, let's get into it. In case you were unaware, Bitcoin is on discount right now. But how? Well, at its current price of $20,000, Bitcoin is considered to be undervalued by two industry experts and a major financial institution, who believe that it should be priced higher. JP Morgan Chase reportedly estimated that the coin is worth $38,000, which is around 90% more than what it is now worth. The current value of one Bitcoin on the open market falls somewhere in the range of $40,000 and $50,000, as stated by Jerian Timmer, head of global macro at Fidelity Investments. And according to D.A. Davidson's reporting, senior market analyst Chris Brendler forecasts that the price of Bitcoin will reach around $38,000 by the end of the year and $50,000 in 2023. According to Brendler, the fact that it is difficult to ascertain the cryptocurrency's precise worth makes it a unique coin. When consumers just buy with the purpose of witnessing a gain in value for their investment, the asset typically sees these exaggerated upward moves. So, what does this imply for people who are considering purchasing Bitcoin as a long-term investment? And is it a good idea to make a purchase right now, when the cryptocurrency market is supposedly on sale? According to the opinions of several monetary authorities, it may be beneficial to take a short-term risk on cryptocurrency investments provided that doing so will not prevent you from meeting your other financial commitments and that your long-term objectives are crystal apparent. But what exactly is going on with the prices of cryptocurrencies? A number of different issues, such as growing inflation, Russia's conflict in Ukraine, rising interest rates, and economic anxieties, have led to a sell-off in cryptocurrencies such as Bitcoin, Ethereum, and other similar currencies. Bitcoin has dropped almost 70% from its all-time high of $69,000 in November 2021 to its current price of approximately $19,000. The price of Ethereum is now fluctuating at about $1,000 as a result of a significant and long-planned network update. Following the release of the most recent inflation report in June, the Federal Reserve increased its benchmark interest rate by 75 basis points, which was the greatest increase in 3 decades. And as a result, the cryptocurrency market saw a severe drop. And if you were wondering how bad, the value of the cryptocurrency market dropped by more than $2 trillion, while the stock market went into a bear market. The value of one Bitcoin dropped by over 40% throughout the month of June, reaching a price of just under $18,000 at its lowest point. And the price of Ethereum dropped to a low of over $900. So, does buying the dip seem like a good idea? Well, experts believe that if you have determined your level of risk tolerance and prioritized other aspects of your financial well-being, such as setting money aside for an unexpected expense, paying off debt, and investing in a traditional retirement plan such as a 401k, now may be a good time to invest in cryptocurrencies while their prices are still low. For if there is one thing that investing in cryptocurrencies has taught us, it is that the market can be very unpredictable and volatile at any one time. It is hard to keep up with the constantly shifting market values, which are determined by hype, speculation, and the state of the economy as a whole. Actually, investors should be aware that price fluctuations are to be expected and should be prepared for prices to fall even more if they opt to buy now while the market is weak. So, do not invest in cryptocurrency if you have a strong aversion to market swings. Invest just what you are willing to lose across all of your cryptocurrency investment strategies. The majority of those who specialize in finance recommend against investing more than 5% of your whole assets in cryptocurrencies. And the two digital currencies that are recommended to novice investors by both financial industry professionals and Next Advisor's investability score is Bitcoin and Ethereum. They are the two cryptocurrencies that have received the highest ratings so far. But what does the whole market look like? Oleg Giberstein, the co-founder of the automated cryptocurrency trading platform CoinRule, claims that cryptocurrencies are subject to the same kinds of economic forces as the rest of the economy. Not only cryptocurrencies are suffering losses, but everything else is as well, and the prognosis for the economy over the next 6 to 12 months is not optimistic. Central banks are in a difficult position as a result of sluggish economic development and rising inflation. It seems like investors are trying to get out of risky assets like Bitcoin and tech stocks as quickly as they can. So, Giberstein did warn that things might grow even worse during that amount of time, which means that it is hard to tell if this is the beginning of a continuous trend or just an isolated blip in the data. Bitcoin's decline was not an isolated incident, and as Sam Kopelman of Luno put it, falling below $20,000 leaves Bitcoin on the verge of a critical support level. And before making a significant comeback, the price of Bitcoin could fall as low as $15,000 before beginning to rise again. The market is currently coping with the consequences of the continuous upheaval in Europe, in addition to the fact that interest rates in the United States are climbing. So, is it smart to buy the dip in this situation? For starters, let's say the concept known as buying the dip is predicated on the assumption that falls in price are only temporary and will eventually be followed by an increase in that price. Dip buyers anticipate that prices will eventually rebound, so they take advantage of price drops to make purchases at steep discounts. So, due to the volatile nature of the cryptocurrency markets, investing in cryptocurrencies at any time is laden with risk, but doing so during a price decline that has the potential to become a long-term trend is riskier. However, there is a possibility that the price could return to its previous level, but if it continues to fall, your investment could end up being undervalued. It is possible that a decline or collapse, depending on one's point of view, will be followed by a rebound in the same manner as it was followed by a rebound in the previous year when prices fell to comparable levels before recovering and even reaching pre-dip levels in the fall. If what happened in the past is any indication, there is still a possibility. While judging by the past, the price of Bitcoin has shown signs of seasonality, with a fall in value during the spring and a resurgence in value throughout the early summer, with the degree to which each occurs fluctuating. But the past is no guarantee of the future, especially in the volatile world of Bitcoin, and past success is not a guarantee of future outcomes. According to Oleg Giberstein, many an inexperienced investor has been burned to a crisp attempting to catch falling blades. So, if you are planning to purchase the drop, he advises you to establish a monthly budget for yourself and be steadfast to it, regardless of what the market does over the next 2 years. Another expert, Pavel Matveyev of the digital currency X, recommends that purchasers spread their wagers over many exchanges. According to what he said, it is essential to diversify your crypto assets by purchasing a variety of altcoins in order to lower your risk. It's possible that you could have felt anxious as a result of the decline in cryptocurrency markets. But make use of it as a prompt to remind you to reconsider the reasons that led you to become involved in the market in the first place. But to say the least, why not buy Bitcoin? It's on discount. And that's all for today's video. Thanks for watching. Have you been buying the dip? And which coins are you planning on adding to your portfolio? Also, if you are interested in more videos like this, make sure you like this video and subscribe to our channel. Don't forget to turn on the notification bell for more amazing videos. Goodbye. See you in the next video.